Hi, this is Brent with another chart breakdown supporting our clarity spotlight on ARKK last week. I thought we'd drop a quick video and talk about the ARK SPY ratio chart. It is one of the most, I think, critical charts for the year. Those that have been reading all or keeping up with our content and reading, or that those that read our special report for heading into 2025, and that we believe that 2025 would be the catch-up year for the growth trade. There's no better chart to encapsulate that trade than the ARK SPY ratio trade. And what ratio charts do is they compare how two assets are performing against each other. Is one outperforming the other or vice versa? Clearly, uh, the growth sector, which ARKK really kind of encapsulates with its ETF, its innovation ETF, the growth risk sector, did not perform well. It basically was, I believe, the worst performing sector in the market in the post-COVID interest rate hiking, 10-year yield soaring market. The growth sector really got pummeled and did not do well at all. But it has, over the past couple of years, been forming these accumulation structures, which everyone is very familiar with. And we're now late stage. This is what it looked like. This is what the ratio chart looked like back in April of last year. So roughly about a year ago, this was the outlook. This is what we were looking for, what our expectations were moving forward. We believe that there would be some support found soon in this area, and then there would be at some point an upthrust going up and testing that 200 weekly exponential moving average. So this is a chart we've been following, obviously, for a very long time. This goes back to April, but we've been tracking this ARK SPY ratio chart back into 2023, actually. So we've been tracking it all along the way. The interesting commentary that is being need to update this that that is being input as we go. Sorry, that has been updated. Where the Fed has pivoted off of inflation, and the Fed has now pivoted off of its Treasury rollouts, we should see an acceleration of that bounce. So that back in April of 2024, we were looking for a bounce in this area. You see that it extended quite even lower than that to go down and set a Wyckoff spring here, which was really, sometimes you get a Wyckoff spring, sometimes you don't. We got one this time, and you see the reaction that has occurred in relation to how the Mag 7 has performed against the growth and risk sector. This isn't surprising considering the weakness that we've seen in the Mag 7. So Mag 7 is going through, the S&P 500 is going through a reaccumulation process. So it's not surprising to see the growth and risk sectors outperforming, but this is really not just a function of the reaccumulation happening in the Mag 7, but a function of the lowering interest rate, easing monetary policy environment, and the announcement last week that the Fed was going to begin cutting back on treasuries rolling off of their balance sheet, which is going to mean that 10-year yields are going to come down, which means we should begin to see some acceleration to the upside here. We should see a continuation of this impulsive structure that has formed. If we jump over to a live chart, this is live Monday, March 24th, about 12:30 Pacific time. You see that we did gap up and we're holding the gap. All of these signs point to recovery here. Obviously, the announcement from the administration yesterday that they will not be pursuing any restrictive tariff at this time and would only be pursuing reciprocal levies, obviously, is kind of indicative of the headline-rich environment that we're in. That's what we've been writing about. That's what we've been expecting. This sharp pullback that we've seen last week with this jump across the creek and back up to the edge of the creek move here that we also see in the ARKK to SPY ratio chart really speaks for itself. So hope this is helpful. Hope this is helpful for in terms of how to read this chart, what to expect from this chart. So this is basically when we say that we're expecting a catch-up trade this year for the growth sector to outperform the S&P 500 and the Mag 7, which is what we did say in our special report for 2025 this year. This is what we're referring to. You see, this is a very inefficient area within the chart. There's some congestion here because there's a base here. This base is long. And if price can get above this base, it will act as support, providing price the foundation it needs to build off of, the cause that it needs to build off of to get this ratio at least back up to here. And that in and of itself is the catch-up trade from the growth and risk sector. So that's the action that we're going to be looking for from a chart development standpoint. We'll update this as the trade develops throughout the year. But for now, hopefully that does provide a little more insight into how to read the ARKK spike or SPY ratio chart.